Very good morning, to everyone, and welcome to QES Group Berhad's Q3 results briefing. I'm Chris from Image Jiwa Communications, the IR and PR consultant for QES, and I shall be a moderator for today's briefing. Today's result briefing is part of Bursa Malaysia's Investor Relations and Public Relations project for selected listed companies. The IR and PR project is aimed to improve the visibility and accessibility of participating PLCs via more active IR engagements with the investment community. For the first phase of the project, Image Jiwa has been appointed as a third-party IR company to train and educate participating PLCs to conduct effective IR engagement. The selected companies for this program are PLCs that are less accessible to analysts and investors, but highly in demand based on the feedback received from the investment community. We wish to thank QES Group Berhad for participating in this project. The recording of the investor briefing and presentation slides will be made available for all on Bursa Malaysia's Bursa broadcast portal after the event. And we are very fortunate today to have from QES, Mr. Chew Ni Weng, the Managing Director, President of QES, Mr. Liu Su Kiang, Executive Director, Mr. Stanley Yeo, GM Finance, and Ms. Alicia Chan, Senior PA to MD. So without further ado, I now pass on the floor to Mr. Chew and his team to bring us through today's briefing. Over to you, Mr. Chew.
Yeah, hi. Thanks, Chris. Thanks, Shu Wayne, for organizing this session. Good morning to all the participants. As Mr. Chris Chua has introduced, so I'm NW Chew from QES, founding member of QES Group since 30 years ago. So without further ado, let me get my laser printer out. Okay. Of course, there's a disclaimer here. Now, I saw that today's participant has got some new faces. So I thought, just give you an idea, probably I'll just run through the company intro. Usually what I do is, of course, if I see the participant or the audience are familiar faces, they already know QES for some years already. So I will probably skip through some of this. But today, probably I'll just spend a little bit of time just to explain what we do, who we are. Basically these slides is a corporate structure. We have two divisions, distribution division and manufacturing division. So of course, QES started all along out from distribution originally. So we are a little bit different from my Penang peers. So we only subsequent years later, we start up the manufacturing. So that's who we are. And these are the milestones. As I said, I'm one of the founding member of the company 30 years ago. I was 28 years old at that time. And I grew the company from 5-man people to today. I think we are about close to 380 people. Yeah? So you can slowly look at the milestones over the years that we have. And this is the organizing chart. Myself, Mr. Liu today is with me. So he's my partner for many years. And just for your information, he's also my we call secondary school mates. So we know each other for a long time. As I said, distribution and manufacturing. Now, distributions, we specialize in analytical instruments, inspection, test, measuring equipment, materials, and engineering solutions. Now, distribution means we actually distribute high-tech products from Japan, Europe, US. So this has been the model of us for many, many years, and it's still a very large component or revenue of QES Group today. Manufacturing is something we started after the distribution, and we have two categories of product lines: semiconductor, inspection, measuring, and the automatic handling. So that's where we are in terms of manufacturing. And of course, the last 3 years, I think I'm trying to build this manufacturing up. Hopefully, we can reach a certain level of economy of scale. So I would think we are on the way, but we are not there yet. Distribution side, there's a big one on the top column there. You can see inspection, test, measuring, materials, and engineering solution. These are towards the application side on the second row, and the sectors that these products are in, and also the supplier's name. You can see that some of these are very established names that we are carrying. Yeah. In terms of manufacturing, as I said, we have the inspection and measuring. So on the left side, if you are familiar with semiconductor, so all this inspection are automatic optical inspection series, the semi-automatic series, and also the advanced metrology series. So later on, I'll explain a little bit more on that. And the automatic handling systems are more towards standard products line. Of course, some of them started as customization, but eventually we want it to be a standard product line. So we can have wafer sorting systems, a batch transfer system, packing and unpacking system, batch ID reading system. So all are applicable in the semiconductor environment. Yeah. This is just a chart. The process flow of semiconductor. If you are familiar, wafer probing is on my left side, and before wafer probing will be the wafer fab. So these product lines are all towards the intermediary between the fab and the test and assembly. And as you go forward to the final test site, so you have wafer dicing, die attach, wire bonding, molding, and then the test. Now QES is not really into the test environment, so we are more towards the upstream here. So you can see all the product lines here, and these two are something that we are continuously developing, and I will probably explain a little bit more towards the end of the slides on the product development point of view. Now, we also recently started up a Industrial 4.0 and Smart Manufacturing team in Penang. Now, this team, of course, they are all software engineers. Besides doing the software for our machines, they are also actively involved, working with our clients to come up with IR 4.0 or Smart Manufacturing solutions, basically for industrial, either small SME companies or large multinationals. We're trying to target this. We believe that, with the so-called proliferation of 5G, then eventually most of industrial factories will actually go for either smart manufacturing solution with IR 4.0. So we think, this is going to be a growing trend. Yeah? This is just a slide showing that what we are doing. We have a smart vending solutions, smart security solution, IoT sensing solutions, and then also, to a certain extent, integrated warehouse management solution as well. Some we have tested and run, proof of concept already done, a small PO has been achieved, but we think as we go forward the next 3 years, we think this area is going to be huge eventually. So that's where we are focusing on, our small team in Penang. Now, these slides will give you a better idea in the manufacturing, distribution, and spare parts and service. So I would think we have, of course, a lot of market segments, industrial point of view, but the three primary segments are semiconductor, E&E, and automotive. That contributed probably 90% of our revenue. So this manufacturing is 100% involved in semiconductor now, maybe 99 or 98%. Distribution covers all three. Now, the spare parts and service are our recurring income. Again, this is a very important pillar for our business. Yeah. Now, that is a company point of view, overview of what we do, and then where we are, which segment we are actually specialized in. So without further ado, I'll also jump straight to the Q3. Now, then the result was just announced yesterday, and I'm sure all of you have digested some of the numbers here. Q to Q, some difference. Of course, Q3 is not as good as Q2, but to a certain extent, I will try to explain a little bit more as we go onwards with the Q&A session. But I just want to quickly wrap up here by looking at the numbers, which I think you all have access to these numbers. I won't go through line by line, but I just want to point out that ultimately, you look at the year on year, we are also doing pretty good, I would say. Like for example, you look at the profit after tax, we are already doubling or more than double of what we are achieving. So that also is a good testimony of what we have achieved in 2021 versus 2020. Yeah. This is just another slide summarizing it. We can see here Q to Q in terms of year prior year. This is the quarter to quarter is the exact replica of just the data just now I show, but more in a summarized version for your convenience. Yeah. Here for the newcomers attending to this session, we'll just give you a trend of our quarterly revenue and profit numbers. So I think we are relatively every quarter we should be profitable except for that 2019, which I've explained quite a few times to a lot of people already. But if some of you still need to know, you're always welcome to ask, then we can share that information. Yeah. Again, these are all some of the highlights that you know, is showing a good trending year-on-year basis. So I just want to show you a simple chart here, but I'm sure you already read the numbers accordingly. Yeah. Strong financial highlights. We are still cash rich in a sense. You know, 71.5 million as of Q3, and we're continuing to build up the cash line. Gearing ratio is healthy. You know, we can actually gear up if we wanted to in future. If we want to do some acquisition or M&A, we can afford to do that way. So I'm always comfortable with the gearing ratio that's at that kind of rate. Yeah. So see my financial highlights. You know, earnings per share. Q1, Q2, Q3, if you add them up here, the 9 months, I think we are already at, you know, probably close to 2 or 1.9 something. So I would think if the Q4 upcoming, so we should be getting good results as well in terms of earnings per shares. This slide is of interest to most of the investing community. Now, usually I'll just look at the numbers here and try to make comments on the rows here. You look at Malaysia, I think we grew strongly for Malaysia side because, you know, distribution and manufacturing and recurring income. We are headquarters in Malaysia, so and our market segments, I would say that we are in a good spot because we are handling semiconductor, E&E, and to a certain extent metal and automotive sectors. All are basically booming right now, so that's why we have a good growth. Now overall ASEAN is also very strong. You know, 32.5% overall growth, so from 62.5 million to 82.8 million. So that's also a good achievement. You can see here, ASEAN, the revenue has overtook Malaysia. Like 10 years ago, Malaysia is still a big chunk of it, but now we are starting to grow outside of Malaysia. So that also augurs well for QES Group, that we are not really dependent on a singular country, or to a certain extent, not dependent on a singular market segment. Yeah. So to pick up Singapore is also tremendous growth, you know, because Singapore is mainly in a semiconductor environment. So QES is really involved in this case, you know, more towards distribution, but we have orders from manufacturing as well for the Singapore market. And our customers are all the wafer fab or the test and assembly companies that is highly automated in Singapore. And they use some of our solution, they use some of our product line. Yeah. So that also is a good testimony of where we are in terms of semiconductor. Vietnam, of course, year on year wasn't that good, but look at the quarter to quarter, you know, it's recurring well for the Q3, and you know, order intakes for Vietnam is still very strong. I would think, you know, Q4 should be very good for Vietnam, and going forward 2022, I see a lot of pipelines ongoing. So Vietnam is going to be a very good market for us. Yeah. Both Thailand, Philippines, Indonesia, all this. Thailand is very much E&E and automotive based. You know, all of you know, there's a lot of Japanese community, you know, making cars and car components. I mean, tier 1, tier 2, tier 3 supply in terms of automotive. So we are very active in that segment. So again, it's showing good recovery. Philippines is traditionally semiconductor, so we see again a good recovery. in Indonesia at the same time as well. Last year was very bad. So this year we are starting to catch back up. So both are recovery plays in terms of Indonesia and Philippines. Yeah. But of course, they rebound from a low base a year-on-year basis. Now, this is a very small number. That's why you see 1,007. This is because of other ASEAN. Because ASEAN, besides this traditional strong five powerhouse, there are the smaller ASEAN countries like Myanmar, Laos, Cambodia, and Brunei. So we're also getting some business from Myanmar. In this case, unfortunately, Myanmar is in trouble kind of politically. But, on a long run, these are all potential for us to grow. ASEAN, I still think that it's a very good market for us to be in. And, it's a 780 million population. So to me, I'm always believer of ASEAN market. Now, the others, again, as I said, we have others are more towards manufacturing. So we did not do well in terms of shipment. So we had one large order, I think close to 5 point something million ringgit equipment that was supposed to ship out Q3, but now has been pushed to Q4. So unfortunately, but I believe it will go out by maybe by now already went out, I think. So in terms of the rest of the world, I think we are more focused on Europe, this part of here, where last year was very good. But this year, quarter to quarter, you can see 0.9 to 1.7 because of one good customer in Europe that we ship out some equipment. And I believe Q4, we will have another, 2 equipments going out by Q4 for this customer in Europe. So I think overall, maybe Q4 for manufacturing side, it should be better than Q3. It's my projection. Yeah. This slides again is the same like what I've explained just now, but it's a more summarized version. So to tell you that we are year-on-year growth point of view or each country in ASEAN. Yeah. Now, this is analysis in terms of revenue breakdown by division. So you can see the dark blue columns. These are our traditional distribution in terms of equipment. And the light blue is our recurring income, which I said is one of the big pillars of QES Group because, it translates to about 40 million ringgit every year without fail and with reasonably good gross profit margins. So that is a very good pillar because it's recurring. So my job now is trying to build the manufacturing business to a scale that I hope it can reach to around, in totality, 30 to 35% of the total. That's our goal. Again, this is a revenue breakdown by industry, which I show that every quarter. Now, it doesn't really swing a lot, but you can see that the 3 primary sectors that we are in, when I say automotive, it includes the metal, yes, and then E&E and semiconductor. Again, I just want to explain the definition. I basically take out the semiconductor from E&E. In our MIDA reports, usually they put semiconductor as part of E&E, but I thought semiconductor is huge, So within semiconductor itself, there's 2 categories already. One is the front end wafer fab. The other one is the test and assembly. So you can see about half of our revenue is coming from semiconductor, whereas E&E is about 18-20%, and the automotive and metal is around 27%. And the others are of course mining, petrochemical, and we sometimes get orders from even academia. So these are all the others. So that will give you an idea of which industrial segments we are strong at. And this slide is it's a good slide to understand our manufacturing equipment. The earlier slides I show you about the pictures of the machines. I color coded it, and if you can have time later on to look at, OIS means it's a semi-automatic inspection series. And AOI is a fully automatic series. The AHS, the green one, is the automatic handling. The advanced metrology is the dark red, and the orange is the industrial 4 or smart manufacturing. Yeah. So, here is a smart manufacturing is relatively small. We had some big projects in last year, But this year, as I said, all the small proof of concept orders and all that. But I'm a strong believer in that. So I'm keep on investing in this area. I think the results will come out 2 to 3 years from now. Very certain on that. You can see the breakdown here is getting more and more even, which is a good sign. It used to be yo-yoing. This one's suddenly very big, and then this one's very small. So I think the AOI will continue to grow, I hope, and AHS also will grow. And this line, AMS, is very lumpy. One equipment can be 4-5 million, but again, sometimes you don't have this equipment coming in. So this part is a kind of big, large equipment where it's very expensive, and delivery time usually is very long, maybe sometimes 5-6 months. So that's your idea of manufacturing in terms of the series. Now, this slide is also very relevant, I think, for all of you to know, to understand our business. Manufacturing is a total number of machines, that install base that we have, and the QES group, both manufacturing and distribution combined together. As of Q3, I think we have 12,766 machines installed. But of course, some of the machines are very old. This data, I collected since day one. So some of the machines like 15 years old, not working anymore, sometimes scrap and all that. So on the average, I would think out of 13,000 here, you take about 6,000-7,000, I think about right. Yeah. But still very substantial, because that 6,000-7,000 machines can yield us close to 40 million ringgit a year, and it's growing steadily, I would say. To some of you asked this question, so this time around with the collaboration with Image Jiwa, so I thought I add on some of the caption here, where what really is our strength, what are our advantages and strength. So looking at it comparatively, we are very well established in ASEAN. I started a company from day one. I wanted to grow ASEAN rather than just Malaysia. So that is already 30 years of work done here. So I think that's very relevant. And we also derive a lot of income from ASEAN neighboring countries as well. So that's also one key advantage of QES Group versus the other peers that is doing the same business. We have very large install base, I highlighted just now. That is the recurring income basis. We have very diversified base of customers, of course, primarily semiconductor E&E and the automotive sectors. But we're talking about 3,800 customers, more than that. So we are not like depending on 3 customers, 4 customers. We don't. We depend on 3,800, and it's building every year. And I think as of now, not a single customer is contributing more than 10% of our total revenue. So that also is a healthy way of a business. It gives us a lot more sustainability in that sense. And here is we have a large pool of very experienced engineers and technicians, 280 people. I mean, I couldn't count to the exact numbers, but I would think more than that. This is important because we are in the engineering field, and all our customers expect us to have experience and good engineers to help them, either solution providing or maintenance. So this is very important part of the advantage that we have. And of course, last 2-3 years, I'm putting a lot of effort to have extensive R&D on the semiconductor equipment and the smart manufacturing series. So this is something that I've been working on very extensively, starting from the moment we IPO'd the company. So a lot of money has been allocated to develop a product line, some coming online, some is still on the way. So this is a very key part that we are doing right now. And of course, not forgetting that because of our distribution and manufacturing combined, so we really are a one-stop solution provider. So sometimes we go a very industrial specific kind of packaging. Like if I go to semiconductor, for example, I have both distribution and manufacturing line of product line. It doesn't really compete, maybe slight overlap, but generally 95% not competing. So customers can actually see that we can be their one-stop solution provider. So it helps them. So I think that's where we are. I think in my opinion, it's a good advantage. And specifically, we can also go into, let's say, steel industry. So again, we have a total suite of product lines that we can tell the steel players, look, you get from QES, you have from this A to Z kind of a range of things that we have, very specialized here. And of course, expertise to manage them as well. To all the investor out there, what do you think? What do you see in QES? So I try to see it from my angle here. Of course, some of you may see it differently. I think some of the repetiting that I'm saying, but it's true. We have a very diverse product lines and market segments. So plus point here, sustainable, long run, regional presence in ASEAN. I'll consider QES as an ASEAN specialist. We have all our own subsidiaries around the network of ASEAN, but we have plans to expand to China with some of the private placement money that we have obtained. And of course, we are stunted by the COVID-19, but we are still actively pursuing that. Very strong financial balance sheet, net cash of more than 71.5 million as of 30th September, gearing ratio of 0.31, cash flow positive. So all what you can ask for in terms of a good investment, so-called justification. Here, stable recurring income, 40 million, 20 to 25% of group revenue. So this is again very good gross profit, averaging probably 30 to 35%. Highly qualified and experienced management. Mr. Liu, myself, since day one, Mr. Liu joined me back in 1997. So we are the one that's steering the ship, and of course below us they have a lot of people has been working with us for a long time. Some of them 20 years, some of them 15 years. But on average, I think we have most of them are more than 10 years and very technical and operational functions. As I said, we are spending money right now, very extensive R&D. I try to allocate 7 to 8%, but of course not on the total revenue of including the distribution, but more on 7 to 8% of our manufacturing division's revenue that we allocate for R&D, and hopefully we can be very focused to develop further some of our semiconductor equipment that we are currently having, plus some new ones. And the key ones here in the long run is the Industrial 4.0 smart manufacturing. So that's where, from my angle, why QES is above the investment merits. Now, a few more slides here is more on the corporate updates. We had a little bit issue in terms of FMCO. Originally, I wanted to move into the new place that we bought for 21 million, just 2 streets behind our current operation. We couldn't get the construction work done. So now it's been rescheduled to somewhere around March 2022. And really, I think some of the fund manager asked me, can I visit your factory and all that? Right now, I think this is not a good timing. We are all trying to move to the new place, renovation starting and all that. So I would prefer, preferably by March, maybe the COVID-19 is getting better, then also I can show you the new place. I think that would be ideal to have a session with all the investing community to visit our new place, and then you can see better what we do and what kind of machines that we are doing. So the space of manufacturing will increase from 39, the overall space will increase from 39 to 81,000 square feet. That is high conglomerate. Manufacturing will increase from 25 to 35,000 square feet. Now, the good part here is I'm building a clean room. Originally wanted to do on a so-called ISO 7. Now we have upgraded to ISO 6 recently because a customer, fab customer asks us, you have to comply with certain cleanliness. So we just upgraded again. Luckily, we are in a stage of doing renovation. We can do that, A quick update on the the joint venture between AE and QES. We call it AEGM. We are already starting hiring. People are coming in, and we have an initial team of engineers already working. I think we identify 2 or 3 people that is going to US for a couple of months training. So that has been arranged already right now. We rented a factory. Now we are doing the refurbishment of the rented factory right in the Batu Kawan. I think it's very close to Micron or Lam or all these people. So it's convenient to handle some of the clientele in the future. and we expect to complete it by end of December, this renovating work, and really full swing by Q1 2022 lah. So that's the update on the joint venture. I think you all have heard that we have acquired the piece of land, a 2-acre land in Batu Kawan. This is again is a part and parcel of our expansion plan. I'll try to explain in the next slide here. Now, our Penang expansion is basically the second factory. QES, the factory operation in Shah Alam, in Haikom Glenberry, some part of it will be starting to be migrating to Penang. And also that factory will house our Industrial 4.0 and Smart Manufacturing team, QES Vision Solutions, which is a subsidiary, and also hopefully AETM, the joint venture company. And also we have a distribution team in Penang that also will move into the new factory. We might as well do it all one shot, one singular location. And we plan to start building the factory maybe middle of next year onwards. And I try to make sure that at least we have 100,000 square feet of space, and 3 years from moving in, maybe we'll have about close to 100 people there. So that is the plan for Penang. So some people ask me, why do I have the Penang expansion? Now, all of you know, the supply chain in Penang is very matured. Of course, I can still leverage them from KL. But again, if you are in Penang, it's probably easier to work with the supply chain in Penang. So I just wanted to leverage the ecosystems of semiconductor, E&E, or even medical technology sectors that is very hot now in the Penang area. So we want to be part of that ecosystem. So that's the reason why we want to move in to Penang with the kind of investment outlook that we want to do. In terms of the outlook summary, I think this is where I think most of you are interested to know. I just quickly run through probably Q&A time. I can take some questions. In terms of manufacturing, the order intake from semiconductor customers continues to be strong. Unfortunately, we are just like anybody else, we are impacted by the supply chain issues and shortage of critical components. This one, we just can't avoid it. No matter how I want to mitigate it, we are impacted way that way. We already launched the PDA 1000V. I have a video, but later on, if you have time, you can see it. That is more towards a kind of a customized system for automated inspection, mainly for IGBT. We work with a customer in Malaysia here, and we have successfully installed and tested the whole system. Now I'm trying to proliferate these systems because we understand from customers this IGBT power device is extensively used for EV. Their volume ramp up because of that, and that's the reason why we think we can duplicate these sales, especially to China and to some of the similar applications. The other one is the WSM 1002, which we launched it 2 months ago. And again, this is for metrology inspection in terms of bump wafers and also SiC wafers. SiC is a silicon carbide so some of you who might know. Again, this is all the new materials, not new already, maybe 3-4 years already, that they have been used extensively for the manufacture of ICs using this new material. Of course, there's another one called gallium nitride, but I just put it as for example. This is SiC is one of them. And the elephant in the room, wafer inspection AOI, I think it should be ready by end of December. Pushing very hard for that. It may not be a complete full-fledged system. As we go along, we will have upgrades, as we go along, because it's a prototype. So I would like to invite all of you to see the system somewhere around the new factory when it's ready. So this is some development in terms of manufacturing. A lot on distribution now, because the last 9-month results is a tremendous order intake, from semiconductor. We are getting very, very large orders from both front end and back end test and assembly customers. Even October, we still receive some orders, but these orders are all, even though it's large, but we can't deliver this year. So all the delivery has been shifted to next year because shortage of components and all that. So our suppliers, Nikon, Rigaku, everybody is facing the same thing. So I would foresee big orders that cannot be delivered this year, but all move up to next year. But again, based on 9 months of the year to date, in terms of our distribution, we are already like, all record revenues, put it that way. So I'm not concerned because distribution is very strong. We have a ASEAN market that is very very niche, and then of course the product line from our Japanese and European or US counterparts, they're all showing very, very good growth. And recurring income as of 9 months or so is showing very steady. So it's about close to 21% of our total revenue. So I have no concern on distribution. I'm actually spending more time on manufacturing actually. So I've said it many times to the media people. I think we will record double-digit revenue growth. Yeah, but even 9 months is already showing that. So I'm pretty confident. So Q4 I expect to increase the revenue, but based on some of the equipment has been delayed in Q3, it will fall into Q4. So I think some of the manufacturing numbers will hopefully get better in Q4. Yeah, and you ask me, what keeps me awake? Yeah, these supply chain issues. So I've been working around the clock with my team, and we are closely working with customers even, to try to anticipate advanced purchase orders, so that customers also know that they need to issue the PO upfront or ahead of the usual timeline, because whatever they want to do, they have to add at least 6 weeks or 8 weeks more towards the delivery time. So this is what we are facing right now. And of course, I have manpower and resources, capacity planning. So these are all very critical. Sustainable, talent of pool of people. That is also always my headache, put it that way. With ASEAN, other parts of the world gradually opening up, I think continuation of good order intake momentum is still going to be there, towards the overall 2021. And as to 2022 and beyond, book-to-bill ratio, when we close end of 2021, for example, I believe that it's going to be much higher than the parity. So that I think is also an important indicator that 2022 we have a lot more billings because all carry forward. And I believe by first quarter, the joint venture company will start full swing with a lot of product transfer from US and hopefully some new client as well. We plan, as I said earlier on, to build the QES second plant somewhere around second half of 2022. And we hope we can start to travel to China soon. So the China expansion plan hopefully can yield positive results by second half of 2022, which I think we wasted almost 1 year already because we can't travel there. So in overall, if you ask me, with the EV, the 5G, IoT, all this is still very, very strong momentum. I think you may have some blips, I believe, like recently, if you read some reports, the demand of DRAM is kind of falling a little bit. We expect the second half, the DRAM prices will be going down. But I think these are all blips, yeah. But if you look into the timeline, the horizon of 2-3 years, I think you will probably think that we are in the right segment, semiconductor, E&E, industrial, all this is going to be still very, very strong, barring from some major issues. But I think I'm pretty confident that the next 3 years will be very good for QES Group. Yeah, I attended some of the sessions also. Then a lot of people ask me about this, what's QES plan for ESG and all that. Yes, even though we are a small company, but I'm already actually doing some things so that as we go along, then we can improve hopefully with a lot of guidance from my peers or some of the people that we're going to hire in the future. So the new factory probably will do solar panels. So we already budgeted for that, even the Batu Kawan as well. So hopefully that can help. Rain harvesting systems is going to be installed at both sites. And the last 2.5 years, I've been talking about full digitalization of QES Group. We have been, I think, about close to 80-90% already. So I think we have reduced quite a lot of paper and energy wastages. So that helps in the environment. And all the aircons that we're going to put in the future, all will be inverter based. So hopefully that will reduce energy consumption as well. Even though it's like 20% or 25% higher, I think we have to do that, So that's one part of the environmental action plans that we're doing. In terms of social, yes, I think we have both gender and race diversity. I think probably QES Group, we have 30% Bumi employment. And of course, we have also close to 20 something percent women. So I think we are close. Workplace improvement, as we are moving to a new place. All the things have been geared to hopefully our staffs can work in a better environment. And we have plans, all this volunteer work, donation drives and all that. So all this is part and parcel of social. And of course, governance is important. If we were to apply to migrate from ACE to main, this become even more important. And we are already doing that, but I think we can be improved. And one of the key areas here is, of course, to maybe set up the dedicated ESG committee and task force in the coming FY 2022. That's so this part and parcel of the plan of ESG. Yeah. Private placement utilization, unfortunately, I think the 8 million here is still hanging because of the delay at FMCO, but I think it will be consumed soon because we're going to move in by March. So our contract already farm out to the contractors already. R&D, slow pace. Especially in China, as I said, we can't even move. And this area here, again, we might turn some of this into factory expansion, the acquisition-related investment. So the next 2-3 months, you'll see hopefully a lot speeded up utilization. Yeah. These few slides, I think you all know better than me. So it's all showing the semiconductor is growing. Everybody is showing the same thing. And I just want to run through this quickly. And this is just an artist's impression of our new so-called renovated factory by March. If you have an opportunity to visit there, this is how it looks like. Yeah. So, okay, that's end the presentation that I have. And I really want to go into the Q&A sessions then. Chris.
Yep. Thank you, Mr. Chiu, for the very insightful presentation. We now open the floor for Q&A. You may unmute yourself to post your question or type your questions in the chat box and we will read it out.
Hi, Mr. Chiu. Can you hear me?
Yeah, can.
Hi, this is Jun here. Yeah.
Hi.
I just got a few questions. I'll start with the first one. I think you mentioned that there was some deferred revenue from 3Q to 4Q. So, my question on that is, how much was, do you think was the estimated total deferred revenue as a result of, the capacity constraints in the third quarter that you see?
Okay.
Deferred into the fourth quarter?
Of course, in totality, it's quite a big number, but I'm just referring to the manufacturing side. We have one machine was supposed to ship out by end of the last quarter, but we couldn't make it. So that machine itself, as I say, is very lumpy. That machine itself, the value is already 5 million, close to 5 million ringgit. So, that machine is now being, I think, either shipped out already or it's been shipped out now. So that is in terms of the delay. But in terms of overall, Q4, if you ask me, I think it's like a sprint. Q4 is like we are all rushing, customers are all chasing us. So we try to ship out as much as we can, barring the critical shortage of component we can't help. But then I would foresee that Q4, in terms of billing forecast, is going to be, I would think, better than Q3.
Right. Okay. So at the minimum, the deferred revenue in the third quarter is 5 million, which comes from manufacturing, not even taking into account, deferred revenue from distribution. Is that right? Is that the right way to think about it? All right.
Right.
Okay,
because distribution is very varied, so I don't pick up, because some of them is like small, like 100,000 there, 50,000 here. But
Yeah, yeah.
I only see that, okay, the equipment side in terms of manufacturing, that's the causing the disparity in terms of quite a fair bit, because 5 million is a big number. Yeah.
Yeah. Okay, next question would be around your order book. If you can give us an update on what your order book looks like right now for distribution and manufacturing.
Okay, the order book up to 31st August, we are at the distribution side is 81 million, and the manufacturing is 11. So total is about 92 million.
Okay. All right. How would you describe your order visibility versus the last quarter? It sounds like your order visibility has gotten stronger and longer, especially looking into next year.
Yes, I did just now. I was just commenting on that, because we received quite a few large orders. One order, as a distribution side, one order, can be $1 million US, can be a 1.2 million US, but the delivery lead time for those orders is about close to 5 months or 6 months. So you get an order in October, definitely you have to deliver somewhere April or May next year. So all this is like a queue. So you have all the orders queuing up, and as I say, the visibility in terms of 2022 first quarter, basically you're trying to ship out whatever order you receive now, put it that way.
Right. Got it. Maybe just one last question before I jump back to the queue. So I know you talk about your vision on manufacturing revenue being 30-40%, 30-40% as a future share of your total revenue, and I think you talk about some of the key drivers already, which is the capacity expansion in Shah Alam and Penang, and the JV with Applied Engineering. Are there any other drivers that you would like to share, regarding how are you going to kind of scale out, to get to the 30-40% manufacturing revenue as a percentage of your total revenue?
Yeah, I think that's a good question. Now, of course, internally, organically, that's what I'm trying to do. What I'm going to do is, of course, besides the Shah Alam plant here, we are trying to expand with a newer facility and clean room and all that. So the Penang one is just announced, but that will take time. When you build a plant, it will take 1 year and all that. So then in the advent of Industrial 4.0 and smart manufacturing, all this also will take time, 2 years, 3 years from now. Then the joint venture, even though we are 30% ownership, but I think it helps us to leverage, because I want to move up the value chain. I want to go into the wafer fab equipment industrial segment. So I wanted to learn from this joint venture. So all this, it takes a little bit of time. Now, how long it takes? Organically, if I want to do it, I want to do it within 3 years. Right? Meaning that I want to move the revenue needle, to 30-40% of our total revenue within 3 years. That's my target. But okay, what other things that we can do? And as I said, our gearing ratio is comfortable. Now, all along the past months or year, there's always people talking, hey, Mr. Chu, hey, Mr. QES, why don't you look at our company? Why don't you look at what we do? Is there a synergy? Is there a complementary business that we can do together and all that? So this is also part and parcel. I don't want to put it, but just saying for the sake of saying, there's no meaning to it. I really want to have active M&A kind of programs, which I'm actively looking, to be honest. But it's not easy, because I'm always very concerned about the implementation side, the integration side. You can acquire, yes, no doubt, they can give profit guarantee, you can do all these things, but then ultimately I always look at how well that organization can fit into us, because I don't want to spend unnecessary time to really do a lot of things that is unproductive to integrate the team. So I'm very careful in that sense. So that, again, hopefully give you an idea of what other drivers that we may try to achieve to hit 30-40%. That's ultimately one of the drivers as well.
I think AE is a fantastic start, knowing that their key customer is Lam Research, and now Lam is in Batu Kawan. But I'm just wondering about your, the sales team, right? So any color around how you're planning to grow your sales team? Because I think you have some money allocated for sales teams in China and Europe. Maybe some color around that would be helpful.
Okay, June, first of all, I think let me, everybody is here. Let me say that for applied, please do not assume that the LAM is their major customer, okay? They are doing a little bit of work here and there, but as of now, it's still a work in progress. We won't have not have got a plan ready, so I just want to make clarity on that. Then to the question of in terms of the China expansion, we are trying, put it that way. But unfortunately, to visit them, visit the customers in China is impossible. We apply, we try, get some special visa and all that, all rejected, so we just can't do anything. So now we are relying on our sales channel partners. We appointed a few, 2 or 3 new ones. But, it's not going to be magic, you appoint one and then immediately the guy gives you 10 million orders. I don't think so. It takes time to build. So we are actively looking into that, and we also even thought about collaborating with our peers who are non-competing with QES, who has got strength in China business. I have few names in my head where I know the owners very well, so we also might look into some collaboration. To answer your question, these are part and parcel of the internal brainstorming sessions that we have to increase our revenue plans for China. Yeah.
Okay, brilliant. Thanks a lot, Mr. Chiu.
No problem.
We have a question in the chat box, Mr. Chiu, asking, as your manufacturing grows, will distribution suppliers concerned of conflicting interests in the same product categories?
Okay, I think I've answered that quite some quarters ago, but in our business, as our manufacturing grow, some of this distribution, of course, I said overlap, but it's a very minor overlap. Because why? It's by design, by nature. If I want to do grow this manufacturing, if I want to do certain product line, I'll be very mindful not to really go and head-on competition with our suppliers. Then of course I need to choose one. I can't have two existing. Same product line, head-on competition. There's no meaning that our manufacturing make the same machine that compete with our distribution. So to me, it's not it's a no-no. We should not do that at all because of ethical reasons, because of reliable business partners. I believe in that. So whatever manufacturing products that we are doing is always complementary with our so-called distribution product line. So rest assured, we will not have any conflict of interest. So some overlapping one, you ask me, I will upfront declare. Example, we have products, let's say semi-automatic wafer inspection. Okay, now Nikon probably has capability to overlap, but I told Nikon upfront, I buy your microscope, but I do my own automatic handling system, which they don't do the automatic handling system. They do also maybe a little bit smaller tabletop version where we do a standalone version. But upfront, we discuss with the suppliers and make sure that everybody is on the same page and we are calibrated. In fact, I also offered that they can also buy from us if they wanted to. So that's how we go. So hopefully I answer your question, Ronnie.
Sure, maybe I just check with you, right? That QES has been operating at 60% capacity during FMCO, right? How much did this affect QES in terms of your revenue and profits?
I would say it affects our manufacturing a lot more because during the FMCO at one time, because Selangor is very bad COVID situation comparatively to our Penang site. So we really have to kind of almost shut down for a certain time frame. Then after that, we apply, then they allow 60% workforce. So once you go into 60% workforce, of course, you got no choice. Everything will just slow down already because factory, you can't have everybody working at the same time because you have a cap with this. So we follow and comply with the government directive. And that, I would say, affect us not on order or profit, but on delivery. So like I said just now, that machine was supposed to ship out in Q3. I couldn't make it anymore. So it just, moved on to Q4. So that is where we are facing in terms of the impact of the 60% capped workforce.
And Paul Yap from CLSA has a question. Paul, you want to share your question?
Yeah, hi, Mr. Chu.
Yeah,
Just
Paul.
on your manufacturing division, right? Because you got quite a couple of series here, like the OIS series, the AOI series, AHS. Just wondering whether any of these series, which one do you actually like specialize in and are able to kind of differentiate yourself from your competitors?
Okay, and this is very, of course, very wide questions. I understand the angle you're coming from, Paul. Now, as we go along, because as I said, we have many customers. So this customer said, sometimes I want this, I want this, I want that. But I'm trying to find a couple of high volume runner, which unfortunately we are at this stage we are building up. So we have not really come to say that this one customer buy, this product actually sells like 50 units a year. So we don't have that kind of volume yet. So that's why we are targeting at, let's say, for example, the OIS is semi-automatic. No matter how I look at it, there are still customers wanting to buy a semi-auto machine. So I wouldn't reject them, because these are all customers that, instead of, I don't have a budget to buy a fully automatic systems, can you have the semi-automatic systems? I will gladly sell to them, no problem, because it's part and parcel of offering. So there's OIS. Now we are spending a lot more money and resources to develop the AOI. The AOI is automatic version. This is where I think the future holds for QES Group. So AOI series, of course, have many processes. So along the way, we think the wafer inspection AOI is one of the key. That's why it took us 2.5, 3 years to develop this product line, which I'm trying to launch it, ready by end of this year, prototype. So that, I think, is going to be one of the anchor products to market in the semiconductor environment. Then, of course, we have the so-called very customization in the initial stage, like what I said, the post-die attach series for the IGBT power devices. This is all in development with our existing clients. Our existing clients say, I have this IGBT product line. Now, can you guys make a machine to inspect 6 sites, 4 on the horizontal, top and bottom, all together simultaneously? So we work, our team worked on it, blah, blah, blah. And then it took us like, 6 months or 7 months. And finally, we actually get this product, and we got the order. We were competing with, I believe was Pentamaster and one Singaporean company. So, but the customer finally gave the order to us, and we do a lot of work to convince the customer that, our system is actually better and more cost effective. So after we successfully do this, after 9 months of work, we think we can duplicate this to maybe the similar makers of IGBT. That's our plan now, okay? We try to do that. So hopefully this can become a good runner for us. So similarly, the advanced metrology system also, we try to do that. It's AOI series, fully automatic series, but under AMS. So hopefully it can be a good runner. So to your question, we used to have a good runner in post-wire bonding inspection, the PW series. Okay, we think we still, today we are still selling, but still not a huge number. So we are selling probably, 5, 8 machines a year. I would love to have it like 20, 30 machines a year. So we are not reaching that level. So that's the reason why our quarter to quarter in terms of manufacturing is still a bit yo-yo-ish, but I believe that we are heading towards that. So I really think that your questions is very wide, but we eventually will come out with a very stable product lines that can have a higher volume. So that's the eventual target.
Right, and then just also building out on that question, just wondering like how big is your customer diversity within the manufacturing division, and maybe what are your thoughts on perhaps maybe working with just focusing on one large customer, then you can build your base and also can tap into their growth and give you that high volumes that you seek? Is that possible for the equipments that you do? Yeah.
It's possible. We may have one or two customers that are high volume. For example, we want to do that, but we used to have one back in 2017-18 that time. I think you can see that our post-wire bonding, that customer bought, I think, close to 11 or 15 machines, if not more. So again, this is an ongoing thing, and to me, I prefer to have a product range that apply to a specific industry. Let's say that's an assembly. I have a few product line. Wafer fab, I have a few product line. Then I go in that industry. That is our business style or model. I think in the long run, it's more sustainable. Then, for example, I work with, I work with the UNISEM, this particular product line, and UNISEM give me 50 million, of equipment order. But to me, that kind of business model may not be sustainable. So I really wanted to have a range and covers the whole industry and certain processes. So of course, we did a lot of market study, whether this product is really to the total addressable market. Is it big enough for us to really go into that? Of course, sometimes we make some mistakes. Sometimes we go wrong. Or sometimes we went in there too late, then the competition is so strong, then eventually we say, okay, we move on to another series, It happens, so I hope that gives you an idea of what we are doing.
Right. Thank you. I just got one more question is actually on your distribution side, right? Because of all these supply chain constraints, material shortages, and etc., wondering whether your suppliers are actually increasing their ASPs and whether you can actually pass this on to your end customer, and whether that will, potentially impact your gross margins, and also is there any time lag to passing on this cost if it's possible? Yeah.
Okay, I think that's a good question, Paul. Now it's already happening. We have our partners, our principal, actually farming out information and notification, both distribution and actually manufacturing. So manufacturing, I go on manufacturing first. Of course, this one is more of a BOM, raw material and all that. The price has gone up, shoot up the roof. But then this is a small percentage of BOM, certain product lines, so that the BOM is not a big percentage of the total equipment cost. So if we can absorb it, we absorb it. If we can't, we'll pass on. So that is manufacturing side. But distribution side is different story, because they will, like an equipment, they say, okay, Mr. QES, effective from this date or this month, the price for this product is going to jump up by 6%, for example. So for us, we will have to pass on to our clients. We have no choice because distribution, so to us is we will pass on, whatever increase from our suppliers, we will pass it on. If it's just 2%, okay, sometimes our margin is good enough, we'll just absorb it. But then overall, anything more than 5%, we will pass on. So that I hope answer your question as well.
Okay, understood. Thank you very much.
Yeah, so I see that I read this the chat here. Queenie Tan from Rakuten Trade. What's my target revenue growth for FY 2022 over FY 2021? I really think that whatever I do, I have a 5-year roadmap, so I put in about 15% kind of CAGR growth, the target. So you can say it's a blended, maybe manufacturing is going to be very high, distribution is lower, recurring income is even lower. So when I blend it up, I hope to get 15 overall. Yeah. So I hope that answers your question, Queenie Tan. Then Aaron Lai from Fortress Capital. Are QES machines under distribution segment exclusively? Yes. Generally, all exclusively distributed by QES, but the contracts, the contracts like 10, 15 years ago, most of the suppliers, they have really migrated from exclusive contracts to non-exclusive, but they treat us as per normal, per exclusive basis. Of course, I have one supplier from Germany, which is a very traditional supplier, no change, fully exclusive, covering the whole ASEAN for already, I think, 15, 18 years already. So I hope that answers your question, Aaron.
I think Kit Singh from KSC has a question. He's raised his hand. Kit Singh, you want to share your question?
Hey, hi, Nguyen.
Hi.
Hope you can give us a better understanding of the value add you provide as a distributor. As far as I can see, you can provide two types of value add. One is that by having a proximity to your customers, say based in Penang, you're able to do installation, service, repair, handholding or whatever, as opposed to a supplier who may be based in Japan, Europe, and very far away. So that makes sense. But when you try to go to China, try to go to the rest of the world, what value add you provide as a distributor on that front? Secondly, presumably some of the customers you deal with will be a bit too small for your end suppliers. It wouldn't make sense for them to have an office in Penang or to deal with orders that are very small in size. So you add value on that front. But if that's a business model, what's the scale you can get by dealing with multiple small customers as opposed to a few large ones can give you bigger size orders? You did mention that you don't have a customer concentration. Every customer accounts for less than 10% orders. That is good in terms of not having concentration or being overly reliant on one customer. But they also suggest that perhaps the size of individual customers cannot be that large given your distribution model. Your thoughts, please?
Okay, let me answer the first question you are asking about the so-called value add in terms of China and all that. Now, for distribution model, it's basically all ASEAN based. We have our own subsidiaries handling all the distribution product lines in ASEAN. But in terms of distribution, we don't handle in China. Like, for example, Nikon, they have their own office in China, or Spectro, they have their own channels in China. Either they have a direct operation, because usually China is such a big country, most of our suppliers have their own operations in China already. So we don't really distribute products in China. We are only concentrating in ASEAN. As I said, ASEAN is already a huge area for us to grow over the next how many years, because it's close to 780 million people in ASEAN. So for us, we are really, really focused in ASEAN in terms of distribution product model. And to your question about, yes, we do handle big and small. It's not that we don't want the big orders from customers. We do, definitely we do. The thing here is we have so many customers under distribution that it spreads out, So whether we can actually cope handling a big customer, I think we can. For example, we used to have, when we were much smaller, right? We used to have a customer giving us, more than 10 million ringgit of orders, and our revenue at the time was only about 30 million. So that customer alone is already like 30% of our total revenue. But then now we have grown in size, so, and the customers maybe still give us 10 million, but then it's going to be less than our total 200 million revenue. So whether we can find further or not, of course, I'm keen to find some of these customers that actually give me like 50 million a year. Of course, I love to have that. It's not that our business model cannot do that. But as I said, we really have to work towards that. So example, I just quote you some example. Let's say, for example, you look at a good example would be maybe Grid Tech for now. Grid Tech, because I saw their report and all that. So they are quite focused. Maybe let's say Lordstown, US. I saw the order is like 200 million ringgit of orders from Lordstown in the US for the EV battery system and all that. So one single customer gave 200 million. That's of course fantastic. But if your business model is going to be fully dependent on a singular order like this, I would prefer to have maybe 10, 20 million orders rather than 200 million orders. My preference, if you ask me. So, that again, a different business model. But because of this distribution level we are in, so we can afford to have that. Whereas manufacturing, I was answering Paul from CLSA just now. Yes, I think we're always trying to find that high volume orders that we want to have. So it's not that we don't want, it's just that now manufacturing side, we are developing product lines, churning out. At some point of time, we will probably narrow down to a few good high runners. But we don't want to be shut out from developing, because in our business, developing is always a good thing. we work with customers is always a good thing. So I'm never going to get away or shy away from that. Yeah.
Great Tech can get a 200 million order because they're a manufacturer and not a distributor. On your distribution business, would you say it is true that by default, the individual customer order size cannot be too big, otherwise they'll be dealing directly with the manufacturer? Because manufacturers have own salespeople as well, just like you.
Yes, I think in that sense, you may be correct. You may be correct in the sense that if the orders is like 200 million, maybe the manufacturer, oh, in this case, why should I need QES? I must do it myself. Possible. It's not impossible. The thoughts process is always that, you know. So, but then when they want to come in, you know, ASEAN is a very peculiar nature, multi-country and multi-nature. So we are here for almost like close to 25, 30 years. So the reliance on QES is still very, very much attached. So even though orders can go up to 200 million, I believe some of our partners will still continue to work with us because to them, no harm. Is already successful, and then, you know, they believe in us, the trust level is there. Why not? So I would love to have a 200 million orders from our customers for one single product from a manufacturer. There's no reason for why we don't want to do it.
Can you help us get an understanding of how big is the penetration in Malaysia already, and what's the total addressable market, say in Malaysia and not, you know, rest of ASEAN for your kind of distribution business?
I think we are strong. Let's say for the one, I quote a sample product line from, let's say we represent this product from optical emission spectrometers, and we have been doing that for the last 18, 20 years. I think our market share is about 70%, I would say, comfortably. So we are strong. You know, we have ASEAN operations, and in Malaysia alone, I think we are close to like 10 inquiries comes, we'll probably hit 7. I have another product line from Rigaku, Japan, very high-end machines. One machine is about $1 million US on average. We had 10 inquiries, and I'm proud to say that my team got 10 of them. So we have a certain strength because of our service support and our presence, the brand name. So everybody's in the semiconductor environment or in the industrial sector, they know who is QES, you know. So, and when they buy from QES, they know they have a good service across the whole ASEAN region, not only in Malaysia. So that is where our so-called unique selling point.
Okay, thanks.
I think David from Spiral Thinker has a question as well. David.
Hi, thanks. Thanks, Chris. Morning, Mr. Chiu.
Hey,
thanks
hi, morning, David. Hi, morning.
Yeah, thanks for taking my question and congrats on the results. You know, quite steady.
Thank you.
Just like to pick up from Kiet Seng's question regarding one of the questions regarding to manufacturing. I note that actually, you know, your breakdown of revenue, you have a very interesting, how to say, characteristic this time, because all the series is like quite evenly distributed, right? And of particular interest, I'm actually want to ask about your AMS series, your metrology systems, right? Is this related to the Nikon products or something else? And what, how to say, application is this for?
Okay. Yeah, I think it's a good observation there, David. Now, the AMS, the Advanced Metrology Series, the anchor for this originally was the Chapman. Chapman is a collaboration between QES Manufacturing and a US maker. If you can remember, I did that a long time ago. Now, the Chapman owner is aged already, so he has passed on the manufacturing know-how to us. So we are making the machine and paying a little bit of royalty to him. But eventually, I might go ahead and acquire the IP outright when the time is right. So that is Chapman. So, but we also recently launched a product called WSM 1200. This one is not with Chapman, but we had the sensor, the confocal laser sensor is from Spain, from Barcelona, from a company called Sensofar. So they are a spin-off from University of Barcelona, and their sensor head is pretty good. So what we did was we actually get the sensor head and integrate with our automatic handling, and we sell it to do wafer bump, simple wafer bump measuring, and also trying to target whether the SiC wafers can have application in terms of checking the roughness and flatness as well. So this is the AMS. So I think that series will keep on growing.
Great that you mentioned this, because my next question is regarding this particular series, right? Do you have a customer for the WSM 1200, or is it being qualified by prospects?
We already have a system installed in a Singapore customer. I am not at the liberty to divulge the name, but they are a big semiconductor giant involved in more on 5G and all that. So they are placing out a second unit. So I think that is a good thing. So we have not proliferated this to China and other areas, but it was focused on this Singapore customer because the application arises from them. So now we're trying to standardize the product.
Yeah, I think that's a great move, because as QES can pick up, your competency regarding the SiC wafer production, right? Then probably in the future you can integrate this technology into your IGBT, PDA 1000V or other series as well, because this definitely is going to be the big trend, especially for EVs and automotive.
Yes. You're right.
Yeah, you mentioned about China, right? So everybody knows that China is going for the China plus one sourcing strategy. Do you see QES benefiting this, trend in the next few years to come?
Definitely. We are of opinion that China, the EV related, whether it's EV making or the components or the battery or whatever EV related, I think China is going to be very, very big. But it's also a very competitive market. So, so when you want to really move some of the product lines for us, the business model that QES has is we will work with some of the big multinational here in our region first. Once successful, whether in Singapore or Malaysia, once successful, we hope to start to farm out this product to China. That's normally what we do. So we will not like outright start to do the development work with a China customer, because that's very taxing. Yeah. Because I don't know the way and the culture they work and all that. So I believe that I want to get something done here, proven, all no issue. Then only I farm out the product to China. So that is the business model that I'm going to do. And I still think that it's a huge potential in China. So I believe that for QES point of view, we are just at the tip of it. You look at all the results announcement from all my peers. Usually their China revenue is like, 20-30% of the total. Income to QES, we are like, single digit.
Yeah, but don't forget about US as well, because US is also, trying to be in the forefront, especially regarding this third generation power semiconductor, especially with your JV with AE, should be able to gain some traction there. Yeah. Okay, my final question, if I may, is regarding your very interesting revenue distribution in terms of, you mentioned nearly 50% from semiconductor. But can you provide a bit more color on this? In this 50%, right, what is the bulk application for? For example, is it mostly for automotive? Is it mostly for communications, industrial electronics, or whatnot?
Okay, I'm sorry, David. Right now, I don't have the exact breakdown. I think there's an interesting question. I might go back and take it as an assignment to find out these particular orders, especially the 50% of a semiconductor. This semiconductor buy this tool is for what kind of application? So I try to maybe get the correct information. Right now, I don't have the detailed information.
Yeah, okay, no worries, because definitely QS is heading the right way with this kind of revenue distribution. So I wish you all the best for Q4, especially with this, disruption in supply, in logistics. Hopefully you can overcome that. All the best, Mr. Chiu.
Yeah. Thanks, David. Thanks.
Yep.
I noticed here, Chris, sorry, but I noticed here Queenie Tan just asked again, it was quite a while ago, out of the 92 million outstanding orders, how would you consume in FY 2022? Oh, all of them, 92 of them, or maybe not, maybe not. Some of them will go in this fourth quarter. So I don't have the breakdown with me. So I believe fourth quarter will consume, I don't know exact numbers, but some part of it. So sorry, I don't have the exact configuration of how much going to consume in fourth quarter and also how much will carry forward to 2022. But based on the delivery timeline, definitely if I said nothing consumed in Q4, all will be consumed in 2022. But I'm sure there's some component of the 92 million will be consumed in Q4, definitely.
Any questions from the floor? Maybe one last question, since we are almost 1.5 hours into the presentation.
Yeah, Friday, TGIF, yeah.
If there's no question, Mr. Chew, maybe any closing remarks from yourself before we end the call? Okay.
No, I don't have much to say, but except that I remember a question from a fund manager some time back. He said, hey, how about dividend, Mr. Chew? So I said, yeah, if we are profitable, anything more than 10 million, I will look into that. So to answer that question again, we are already hitting 14, 15 million already. So I believe I will work closely with the board and try to get some dividend out, hopefully at some weeks or months ahead. So that's my closing remark. And really, I think 2021 is going to be a record year for QES among all the years. So barring unforeseen circumstances in Q4, but everything is just almost there already. So I believe we are heading to a good year in 2021. And hopefully the momentum continues into 2022, and with our expansion plan in Penang, maybe 2023 will come in more results based on the current trend. So with that, I hope to end the session, and I wish all of you a good weekend.
Sorry, Mr. Chew, there's another Sean Teo, I think, has a question. Maybe we'll just take a question from him first.
Sure,
Sean?
sure.
Hi, Mr. Chew. Sorry, I apologize for the last minute question. Yeah, so sorry, sir. PGI, by the way. Yeah, a bit of a silly question. Your silicon carbide technology, are those handling machines or inspection machines? Sorry, I may have missed your slide earlier on the SiC technology.
Yeah, I did touch on a little bit on that, because like David Poe was asking me just now about the advanced metrology series, the AMS. So we have developed some tools that we have confocal laser sensors from Sensofar out from Barcelona. And the existing customers in Singapore is using it to measure some wafer bump. And also they are also, I'm also thinking, could that application can be applied to do on SiC wafers? Because there's a boom, there's a big demand for SiC wafers now. And we are already having some sales via the Chapman, where we are doing the very expensive machine for the so-called raw wafer or SiC wafers manufacturers. So this particular new ones is a more simpler machine and lower price, but probably can do maybe lesser resolution, but it's acceptable. So we think that there may be some application. So our application team is trying to work on that, trying to come up with specific application study to measure roughness and flatness on SiC wafers. So once that is ready, we can farm out to all the SiC makers around China and also this region. So I think in Singapore, there's a big plan making SiC wafers. They just announced that they're going to have, I think, close to how much? I believe it's a couple $100 million US. That company in Singapore announced to make SiC wafers. And of course, China, there's a whole bunch of SiC wafers maker as well. So I think we are targeting towards that. Application point of view is more on roughness and flatness using confocal laser sensor integrated with our automatic handling system. So I hope that answers your question, Sean.
Right. So your exposure to the SiC segment primarily be on the measuring side of things.
Yes.
and you integrate them with your handling machines.
Right.
Okay, got it. Peter, any competitors in this space in Malaysia?
Right now, Malaysia, I don't think so. Of course, there are a lot of foreign players, from Europe and maybe some US makers, but I don't see any Malaysian. My peers, I don't think anybody is making that. Not MI, not Vitrox, not Penta. You know, I don't see anybody making that.
Got it. Thank you, Mr. Xu.
Yeah.
That's all I have. You have a good Friday.
Yeah.
Thank you.
Thanks, Sean. All right, Chris, you want to close the session? Or?
Yeah, I think if there's no further question, then we'd like to close the session. If you have any other questions, please feel free to reach out to Image Jiwa. On behalf of QES and Bursa Malaysia, thank you for attending today's briefing.
All right.
Thank you, everyone. Stay safe.
Bye-bye.
Bye-bye.